All right, Todd Horwitz, thank you so much for coming on the show today. I want to talk about so many different topics, from money to gold and silver to our corrupt government, to where you think the stock market and the country is heading. Thank you so much for being on today's show.
You know what? It's always great to be with you because you're one of the few guys who actually tells it like it is and gives reality to what's going on around the globe.
Okay. Well, I appreciate that. People need truth and good information in order to make money decisions and family decisions. So let me tell them why they should listen to you and why I have sought you out to be on my show so many times. You've been trading on Wall Street longer than I've been alive. And I say that not to point out your age, but to point out your wisdom. You bring decades of wisdom of seeing ups that nobody thinks can go any higher, and then they do, and then lows that people are like, how could this go any lower, and then they do. And you've lived through the good, the bad, and the ugly of the US economy and also Wall Street. So the Federal Reserve has just declared two things. We're going to raise the rates by 50 basis points, 0.5%. They've also said, we think we're going to raise them even more in the future. We're not going backwards and lowering rates. What do you think is going through Jerome Powell's mind, and where is the U.S. economy heading?
Well, I think Jerome Powell, I thought he was a great choice when he was made as the head of the Fed. But as every other Fed chair comes in, they become an instant moron. They forget about common sense. They forget about what reality is. And they go into, well, we have the American taxpayer that'll fund all this, so why not continue to spend? I mean, I was way against them bailing out the banks in 2008. You want to bail out somebody, bail out the depositors, not the banks, because banks with fractional banking, are printing money at the same time, especially with the little accounting gimmick that they use when they borrow when they borrow from the Federal Reserve. And that, just so everybody understands, the interest rate that you hear quoted all the time is the lending rate from the Federal Reserve to other banks. It really does not affect the individual. Okay. Our loans are based off of the 10-year notes, which we'll get to in a moment. But so they're borrowing the money, and they can turn that into an asset and then lend 10 times on that money and actually make a net profit on what they're borrowing. So it really doesn't make a lot of sense. So I think the Federal Reserve, I've never seen one raise rates into a recession. Now, I know that this year we changed the rules on what a recession is. So, we had 2 negative quarters of GDP, yet we don't call that a recession right now. But everything points to a recession. I think that everybody should look into their own spending and what you're spending for goods and services. You can determine if you're in a recession to yourself. Forget about what the economists and the government and the Federal Reserve tell you, because they don't have your best interest at heart. You are nothing, we are nothing but a purse for them to take money from, which is why they continue to devalue the currency and make things worth less.
Yeah. You had mentioned in another interview that you believe the Federal Reserve saying that inflation is 7.1% is total BS. It's a lie. Can you talk? Because I know that the people that are watching this right now, they're saying, oh, okay, government data, I want to trust my government. Number one, you should never trust your government. And then number two, you and I both believe that those numbers are wrong. But speak to that for a minute.
Of course, the problem is the formulas that we use. Okay, that's where it really comes down to. The formulas that are used only account for 4% food and energy. Now, they're basing the 7.1% or 7.7, whatever. The last one was 7.1, and they're basing it off of basically large purchases. Well, first of all, most people don't have money to make a lot of large purchases. And in my mind, when I look at it, the American population, their biggest expenses, barring an emergency, are food and energy. Feed your family and to fill up your car, heat your home. And they don't count those as a bigger percentage of what it should be. So you always hear the number X food and energy. They give you another number. These are incorrect from the average spending. We're looking at an antiquated model because food and energy are so expensive. I saw the other day a loaf of bread in the store, and that was a brand name, but it was over $6 for a loaf of bread. Okay, I'm still the cheap guy. I buy the signature brand for $2.99 or $2.49. But you think about the costs that are going higher, and they have to go a lot higher because of the shortages that we have. Somehow we've seen them suppressed recently, but we're still well past 7%. And again, my best way to cure that for you is look in your own spending and tell me what percentage of your income you're spending for food and energy and to live every day. And I think that the average American is well behind what they're earning compared to what they're spending.
Yeah, I mean, okay, so here's a couple examples from my own life, right? I've seen the price of bread double. I paid $4.50 for my normal loaf of bread that I used to pay around $2 for, so it's more than double. You look at a huge percentage of the United States depends on like dollar store, general dollar, things like that. It went from the dollar store to the $1.25 store. Now, I'm not a mathematical genius, but that is a 25% increase, right?
Well,
And they're not gonna roll those prices back. Like, oh well, Jerome Powell and President Biden say it's only 7.1%. Let's go ahead and roll those prices back, right? There's no price rollback happening. And so the government continues to mislead people. I've heard some of that has to do with they don't want to increase Social Security payments for 50 million Americans. And so they have to keep that data suppressed. Otherwise, you would have this explosion in monthly benefits. But how is this going to affect the stock market? In the past, you said you thought we were going down 50% or so. We're about halfway there. Where is the market going over the next 6 to 12 months in your thinking?
I would think it's going to get very ugly. I think the first quarter could be a real disaster for the stock market. I think that I expect a boom time in commodities because money is looking for a place to go anyways, and I think that you've seen so much suppression in the commodity space because when you have light volume and light liquidity, which is what we've been watching, you can try to control markets a lot more. And I think they've been putting a lot of pressure on the commodity space, which will explode when the short covering comes into play. And I do believe that the equities are in a lot of trouble here. I'm surprised they've stayed up as well as they have. But I think if you look back into history and you understand that usually the end of the fourth quarter is a pretty bullish time as a rule, it's not a surprise that we're holding, but we're really not getting bullish action. The only bad Christmas season I can remember is the 2018, the Black Christmas. But we've held up, but not very, we haven't seen a big rally. And I would expect to see a pretty big and a pretty hard sell. And it wouldn't surprise me to see a lot of this selling come, probably week 2 of the first, after the first year. Usually the first couple of days are a little bit bullish. You got a lot of money flowing in. But I think that my prediction of 50 to 70% is going to be spot on. And it's unfortunate because it could have been avoided, but you can't avoid things when the government continues to spend and spend and spend.
Okay, I agree with everything that you just said. Now, we have people in the community watching this that are very wealthy. They are technical traders. We also have a lot of beginners. So just to dial it back so that people can be successful, when you say the commodities are going to do well and the equities might struggle, will you just briefly tell the audience, like, what are the commodities, just so that they know what to look for in research?
100%. It's known as the alternate investment space, and the biggest is usually the grain markets first: corn, wheat, and soybeans. There's a lot of funds that run through there, and they run through boom times. And I think you've watched the method, and especially if you have any farmers watching, they know that their input cost has gone so much dramatically higher that their profit margins have gone to zero. And if that's going to continue, they're not going to plant, which is going to create a bigger shortage. And that's one big thing we always have to worry about, plus weather, right? When you're dealing with a consumable commodity, all right, and you're growing it, you got to count on weather as well. Now, if we look around the globe, there's already shortages that are out there. So to me, the suppression that we've seen has to go away because the demand for food is going to continue. We don't stop eating. There isn't a magic pill in the metaverse that will allow us to not eat. So I think that's the first one that they look to. The livestock markets are a little thinner, but then they look there. There's a lot of funds that run these. And then you go into, the crude oil market. I think crude my opinion is crude's going to go to a record high. Okay. Now, again, I don't want anybody to start jumping buying crude today because I said it's going to record highs, but the energy policy that we live under is horrible. Okay. And that indicates we're going to see much higher prices. You don't think Saudi Arabia is going to do us any favors. And now that we're doing business with Venezuela, that's dirty oil. And I don't mean, dirty from a political standpoint. I mean, that's dirty. It's hard to refine that oil. It's very heavy. So that doesn't do anything for the carbon footprint that they're so worried about. And then, of course, we get to the metals, which are also a hard asset commodity. And with the fluctuation in these fiat currency systems, which are fraudulent, let's be clear that the central banks and governments have too much control because there's no backing to the fiat currency system, that I think that gold and silver someday may be a real currency again. I mean, you might be reaching that little bag in your pocket and pulling out some little coins to pay for goods. And so I would look, but the grain markets will be first. They've been the most beaten down and downtrodden here, and they're the most liquid of all. And that's where the first group of funds go to when they start looking for commodities. So that's what I'm talking about when I'm talking about the commodity space.
Okay, great. Thank you. I appreciate you clarifying that. Let's stick with the metals thing, because obviously offline you and I have talked about the importance of having some gold and some silver in your portfolio. Gold has performed really well, and by that I mean it's not lost a lot. And so, like, if you think about, like, okay, would I have rather started this year with gold or Netflix? Well, Netflix is way down and gold is down just a little bit. Would I have rather relied on Mark Zuckerberg or gold, right? Facebook is way down, right? So you have all these people that have been hyping up these tech companies, and now they're down 40, 50, 60, 70%. And gold's down, maybe 5 to 10%. So it has performed well. But I know you're long on gold and silver, but just for people in the space, they like gold and silver as well. Where do you think those are heading over maybe the next 12 to 18 months?
I think gold will make a new high. Okay. I think gold will get back over 2,000. Okay. Now, again, let's be clear here for everybody listening. I'm not talking about paper gold. I don't like paper gold. And that means like a GLD, the ETFs or the miners. Look, you want to buy them as an investment, great. Okay. But in my opinion, and I have no fact to back it up, it's an opinion, that there's not enough gold in the world to cover all the paper that's out there. When I say I want you to buy gold, I want you to buy physical gold that you can put your hands on, you can touch it, you can feel it, you can smell it, which has no smell, but you can play with it. Because if you need it, that paper gold is not going to do any good. Okay, if you really need it in an emergency, and again, I don't want anybody to think that I'm claiming that there's going to be this major crisis, but there's always a possibility. And I only trade paper gold, but when I'm buying gold, silver, or platinum for my portfolio, I'm buying the real stuff. I'm having it delivered, right? Or I'm storing it somewhere. And I think that's what people have to understand, because I do believe that it's going higher. Now, it certainly could drop, but I do believe it's going higher. Everything shows that it should be going higher. And if you have it, you want to own it, because you don't want to depend on the system of paper to be able to get your money if you need it.
Yeah. And you know what? Gold and silver does have a smell to it. It smells like peace of mind.
That's true. You are correct.
Yeah. At least when I'm holding it, I'm like, man, this feels real to me. Right. So, okay. So, there's a lot of people with 401ks. They're worried about their retirement. I'm seeing articles about more and more people saying, I'm going to have to work longer. That maybe I can't depend on my 401k like I thought that I would. I then also see articles saying, hey, the 4% rule might be coming back, where you could live off of 4% of your money. So as far as the stock market goes, where are you at? Are you still long on the US stock market?
Well, to be full disclosure, I'm always long, right? My IRA is always 100% invested. Now, I do hedge it, though. I use derivatives to hedge against the failure. In fact, for example, today the market's getting hammered, and I've been buying a lot, not personally, automatically, right? I buy it dips, but you have to be protected, okay? And I've also put money in actually short-term money, right? 3 and 6 month CDs, because the rates are now getting close to 4%.
Yeah.
And, so extra cash, there's something known as the yield curve. Okay. And the yield curve is interest rates that go from T-bills at 30 days and go out to 30-year bonds in the United States. Okay. And usually that curve should go like this. Okay, lowest rates in the front and higher rates as the more you borrow money. That is inverted. It's going backwards now. So actually, 6-month money is more expensive than 30-year money. And that's what hurts the economy. That's what creates a bigger recession. Okay. But it is a benefit to an investor, especially somebody nearing that retirement age, which really should be about 75, not 65 or 67. But our government would never change that, right? Because they want to get votes. But overall, we should be working longer. But so now is a great time to take advantage. If you have extra capital and you're a little bit afraid of the markets right now, you can put some in short-term money, 3 months, 6 months, a year, CDs. You're going to get 4.5%, maybe more. So why not, take advantage of that now while you're waiting? Because I guarantee you, 3 years ago, before the markets ran up a little bit, people would have begged for 3, 4, 5%. Yeah. When 10-year was at 1, right?
Yeah.
Okay. Yeah. So that's what I would look at. But I would certainly be invested because, again, if you believe in this country, then the good companies, and again, that's the decision you make. They have to be good companies, right? Then we're going to get 8.5% year over year. But if you're short and very near retirement, you've got a lot of cash, and you're concerned, certainly 4.5%, 4%, 5%, whatever you can get, right? Because it'll change, but is certainly good to lock in at this particular time.
Okay. So just to be clear, because I've had concerns about this too. Anybody that watches my channel certainly should come away from it going, I don't think Stephen Gardner fully trusts the government. But you feel like the United States, with these like treasury bills and notes and other things, we're strong enough with our military and our global position that people are not going to put money into these short-term products, and then the government's going to default and they're going to lose out on that money.
Well, that's a great question. But if the government defaults, if we default, and if we get into that type of trouble, we got a lot bigger problems.
Bigger problems. Okay.
You can worry about you can become a communist and become part of China, because that's what will happen. And that I don't think will happen. The good thing about having elections every 2 and 4 years is that if people finally realize and wake up that this is a crappy administration that we're dealing with right now, and that the whole system is really flawed. This is not what the constitutional framers had in mind when they wrote the Constitution. The first thing is government is supposed to be run city, county, state. The federal government was never intended to be the biggest employer in the world. Okay, number one. Number two, they don't, they spend so much time and money trying to keep Trump from running. Now, again, I don't care whether he runs or not. I don't want him to run because he's only a one-termer. And if he would have kept his mouth shut the last time, he wouldn't be in the problem we're in now. But at the end of the day, they're all taking from us. That's why they all don't want him in. That's why they continue to go after him, because he did put an end to a lot of lobbyists. And one of the biggest things that he had done when he was in office was he put his foot down, and China was not out of line. And Saudi Arabia was not taking advantage of us. And Russia and Ukraine weren't at war. I believe that none of those things would have happened if President Trump had still been president. And that we are the greatest country in the world, but we are slipping quickly, especially when our economists start complimenting the way that China handles their economy.
Yeah, no kidding. And then to find out that Fauci designed all of these lockdowns around what China was doing. Like, I don't want to be governed the way China is governing their people. I actually read from an economist that was very anti-Trump, and he was open about not liking Trump, but he said the one thing that kept the world safe was that he was just so unpredictable. Like Putin and Saudi Arabia and China, they weren't willing to test the waters because they didn't know how he would react. He might take out a General Soleimani or something like that. But real quickly, and then we'll wrap it up because I know you're busy. What do you think of China and Saudi Arabia getting into bed? Is this going to threaten the dollar quicker than we all want, or is this a long-term play?
I hate it. I listen. I believe that China sent COVID over here on purpose. I believe that was a form of chemical warfare. Saudi Arabia is not our friend; they're our enemy as well, and they have power of our oil because we refuse to drill our own. I'm not thrilled. I'm very unhappy with a lot of the outside things that are going on, because what it's really doing, it's stripping Americans of our freedoms, because our administration that's in power now does not react. In fact, they facilitate what's going on right now, which is very scary. Now, for me, listen, I'm 65 years old. where am I going to go? But I'm worried about guys like you. You're younger than me, my kids, my grandchildren. Okay. That's what I'm worried about. For me, it's not going to make much of a difference. But I'm really worried about the youth and the younger people in this country that really don't get involved because the governments keep putting their hand in your pocket and they don't care about you. Just like they just raised the spending bill. Why? Shut the government down. Stop spending so much damn money. Sorry.
Yeah, no, hey, I feel the same frustration. I said in my video yesterday, our government is the most generous government in the world. Unfortunately, they're using our money.
And shut the borders down too.
Yeah. Oh my gosh. Yeah. There's lots of issues that we could continue with. How can people get a hold of you, learn more about what you do?
They can email me direct at bubba@bubbatrading.com. I'll be happy to answer any other questions. Or they can go to my website, bubbatrading.com. I do a daily video update every day, about 3 minutes. It's just a quick what's going on in markets and what I think, and based on what my algorithms are telling me. But again, bubbatrading.com or bubba@bubbatrading.com. Anytime you want, I'll be happy to answer any of your questions.
Well, thank you so much, Todd Bubba Horwitz, for coming on and sharing your wisdom and your time with us today.
Stephen, you're the best. You've got a great channel, a great show, and a great audience, and I appreciate being with you.
Great. Have a great rest of your day.
Thank you, sir.